Hello, everyone. Welcome back to the Options Professor podcast. This is Damien, and today is Friday, October 23rd. Now, usually on Fridays, I do my recap for trades of this week. And if you remember, if you listened to the last podcast, I didn't actually have any good setups in my scans. I kind of had to go to a secondary scan to find stocks. Well, I didn't make any new trades this week. I did have some that I carried over from last week, just a couple. One of them I broke even on, and the other one I took a max loss. So I really can't talk about just two trades in this podcast. And I thought, well, what else can I talk about? And a lot of my students have been asking about indicators. And I've said, you know what, you can go online and look for explanations of all types of indicators. There's lots of YouTubes out there. I just didn't want to be another person talking about indicators or trying to tell you what to look out for. But since I've got no other content to talk about today, I'm going to talk about an indicator and one that I use in my arsenal. I do have a lot of them. And today we're going to talk about the Ichimoku cloud. So if you've never heard of it, I will attempt to explain this over the next 10 minutes. I typically don't like to go longer than 10 minutes. If you'd like to learn more, there are books on this strategy or this indicator. There are way more in-depth YouTube videos on this. If you understand it after this 10 minutes, that's amazing, but there's probably more to it than what I'm going to explain to you in this podcast. Okay. So I'm going to go through this really quickly and talk about how I use it. There may be other ways, there may be other strategies. Just be open to those. And then don't take my use of this indicator as gospel, because it's just how I use it in conjunction with a lot of other indicators. Okay. So here I am in a chart, and in Thinkorswim, all you got to do is add a study. I'm going to go to all studies and look for Ichimoku in alphabetical order. It's just Ichimoku. And here we are, Ichimoku cloud. I'm going to change this a little bit because there's this red line here is a lagging line. I don't actually use it. So let me remove it. Okay, so to remove the red line, that's called a Chiku. And the Chiku is lagging by about 26 bars. So I don't use it. It just creates a busier chart. So I'm just going to remove it. I just click on show plot, uncheck that, and apply. And then there we go. The red line is gone. Now, the other thing I do is this purple line, which you can barely see, this little plum colored line. I can't see it. So I'm going to change it. And this is the Kijun. This is what I refer to as the baseline. And the Tenkan is the conversion line. Okay. And just have those colors. So now I can see them. I can see them a lot clearer. All right. I'm looking at the NQ simply because I couldn't do a lot of spreads this week. I ended up trading futures and doing really well. So I'm going to keep looking at the NQ just for the purpose of looking at the Ichimoku clouds. And the first thing you'll notice are the actual cloud themselves. You can see the shaded areas. There's a yellow one, red one, more yellow. Okay, so these are the clouds. There are different strategies for being able to enter or exit trades or be able to predict what that forecast, what that stock is going to do in price. The simplest explanation I can give you is that these clouds act for me as support and resistance. And then when they break through, they are in breakout below or breakout above. Okay, so here's some perfect examples. We can start by looking at this chart, and as it comes down into the cloud, it bounces out and stays above the cloud. When it breaks through, it's now below the cloud, and this becomes resistance. Okay, and then you can see over here, right in this spot right here, it breaks through the cloud and then heads up. So in real simple terms, I'm just looking at the clouds as ways to show me where that support and resistance is for the stock without having to come in and draw lines I know we do have people who come in and draw out their supply zones, demand zones. For me and for a lot of students, they don't want to have to go through that work, especially when things are dynamic and moving quickly. It takes time, and frankly, a lot of you guys are probably pretty lazy. At the end of the day, though, the more of those indicators you can draw, even if you manually draw them in, they're going to help you. In this case, we're not drawing them in. We're just looking at the cloud as a way to see support and resistance, and then the breakouts, either breakout to the downside or breakout to the upside, like here. Okay. So that's how I would look at these clouds. Now, you'll notice that there is a second line, 2 lines in here. So the 2 lines in here, the blue one is called the conversion line. And then the pink one, the one I recolored, is now the baseline. And they kind of act like moving average crossovers. If you've ever used a moving average crossover, this is very similar. And so we are looking for the times when these cross over. And if I zoom in, you can probably see that right here, the blue line crosses over the pink line, which signifies that the momentum's going up. And you could use that as an entry point. Some people use that and the break above the cloud as confirmation that it's going a little bit higher. Or you can sell below at this level here. You can sell this for credit, sell puts. But then time frame will be really important. So you can see over 2 days, then it breaks back down below. And you can see, if I clear this chart, you can see right here, the blue cross back below the pink, and then it breaks back below the cloud. Okay. And then very similar on the way back up, it crosses the pink on the upside, and then it closes above the cloud. So this is a move to the upside. All right. So that's using these 2 lines, and they're part of the cloud, along with the actual cloud itself. You can see where we have the breakouts, where we have the momentum going up or down, and then using the clouds as our support and resistance. Now, a natural problem a lot of the students have are, when do I exit? So on this big move up, where do I exit? If you're playing this strategy right, you shouldn't exit until the blue comes back and crosses over the pink. And so that would be right here. Okay. So you do give up a little bit off the top, but you're pretty close to the top in this kind of move. So you'd be in this, if this is an hourly chart. So I'd be looking at 1, 2, 3, 4, 5 days in this trade, and then getting out up here. It's a pretty big move to the upside. And if we look at this on the downside, you can see the crossover below the pink happens here. Confirmation it's going down here. You could get in right around here and then watch as it gets back into the bullish play. So that might be a break even for you. Who knows? Okay, but it doesn't confirm to go break out above here. It's still hovering inside the cloud, and then it bounces down, and it's just following the bottom side of the cloud. So today we did have a little bit of break above the cloud. So we'll see what happens when the futures open Sunday evening. But you can see the cloud does draw itself out for another day. So I can see it. Okay. So hopefully that gives you a real quick tutorial on these Ichimoku clouds. They do give you more information than what I just told you. Like I said, if you want more information, go look for some more in-depth videos. I'm definitely not an expert in Ichimoku clouds. This is just how I use them and how I've learned to add them into the rest of my portfolio of indicators. So let me know how these work out for you. Comment below if you like these types of indicator videos that happen in a very quick 5-10 minute type segment, where you can then go out and find out more about them yourselves. Have a great weekend, and we will be back Sunday evening, hopefully with a watch list. Thanks.